Hello everyone, how are you doing? Yesterday I have discussed the contracting triangle pattern in the Elliot wave principle, in which I am describing the various corrective patterns of the Elliot wave principle, and in that series yesterday I have shown you the contracting triangle pattern, and in that series I will discuss the ascending triangle. As the ascending triangle looks like exactly opposite to the contracting triangle, I will remind you the structure of contracting triangle first, then I will show you the ascending triangle. And the guidelines for both the patterns are same. If you will notice, the diagram consists of the five waves: the wave A, wave B, wave C, wave D, and wave E. Finally, it has got breakout to the upper side in the uptrend, and vice versa. It will show a breakdown to the lower side, like you can see in this pattern in this diagram. So basic thing is that when you will need to draw a two trend lines, and at the end these two trend lines should converge. Then only it will look like a contracting triangle pattern. And in the series you will need to get a series of lower swing highs on the upper side and higher swing lows on the lower side. I will show you this on the chart so it will be more clear to you. Before that, recall the guidelines. It is composed of five waves, just I have told you: wave A, wave B, wave C, wave D, and wave E. Wave 4 and 1 can overlap at some point of time, but wave 4 cannot go beyond the origin of wave 3. Wave 3 cannot be the shortest wave. It is the basic principle which is followed in the Elliot wave. In the 5 wave series also, wave 3 should not be the shortest one. Internally, you can notice the corrective wave structure in each wave. Generally, it is told that it can consist of three wave pattern that I will describe on chart as well. And in the contracting triangle, as you have seen on diagram, wave 1 is the longest wave, and wave 5 will be the shortest wave. And in the expanding triangle, opposite to that, wave 1 will be the shortest one and wave 5 will be the longest one. Triangle generally have a base shape, and one thing you should keep in mind that when you are looking for a triangle pattern in the uptrend, you should see a instrument or a currency pair which actually is in uptrend, and vice versa. If you are looking for a contracting triangle or ascending triangle in the downtrend, you should only search those instruments or currency pair which are in the ongoing downtrend. Then it will be easy for you. Unnecessarily you will be wasting your own time. So let us have a look on the chart. This is the example of the contracting triangle. I am describing contracting triangle again, so it will be very easy for you to get the idea of expanding triangle. And as I have shown you that this is the wave A. Just join the highest point in the series and the next lowest point in the next series. Then you will get the wave 1. Wave 1 is the longest in contracting triangle, and wave 5 will be the shortest. This is the wave B, wave C, and then wave D, and we have got the shortest one, that is the wave E, and finally we have got the breakout here. So As I have discussed yesterday, entry point will be here above these trend line levels. As soon as it sees a breakout, you can keep a pending order or you can open a at market also. But as this is the daily chart, sometimes what happens, like this scenario can also happens. It is when it has closed, where if you will check the next day, it will be very far from your lower point side and stop loss will be very wide, so that is not feasible. Sometimes what happens, it can reverse. If it goes wrong, you unnecessarily you will be losing large amount of money. So to avoid that, what you can do, you can adjust the stop loss by using various other techniques. Just what you will, first of all, just look for a simple contracting triangle pattern. In contracting triangle pattern, you can use in any time frame and in you can use it with any other trading system which you are following, because it generally shows a breakout, and when the breakout happens, it instrument generally tend to follow that direction for some period at least. So you can use this contracting triangle pattern with any your existing trading strategy. Then, as I have shown in guidelines, each wave can show a corrective structure in itself, and this is called as the corrective structure. If you will notice, it is showing a three wave pattern in itself. Wave 1A, so it is like this, and this is called as the corrective structure. Now if you will compare this pattern with the diagram I have shown initially, you will find the similar structure. And if you will draw the similar structure in the wave B, you can easily get that. Let me draw it. That's why these are called as the corrective pattern. So this is the three wave structure. Internally it is called as the three wave structure. So you can get the 1, 2 and 3, and here also 1, 2, 3. But it is, and as a whole it is the only one wave, that is the wave A. So you should not get confused, keep it simple. Remove this intercell structure because we don't have anything to do with this structure, neither we are using them for our entry point. So don't worry about this internal structure, just join the swing high and swing lows in the series and you will get the waves. So if you will notice, you will need to join the this point with the this point. That's it. This will be a wave A, then you have got the wave B. First, for the sake of explanation, I have shown the corrective structure that will be look like that. Otherwise, no need to worry about this internal structure. So it fulfills our guideline, and let me remove this. If you will, the structure will be look like this. Without joining the trend lines. Now When you are looking at the chart, you don't know if you will not join the points, you don't know what kind of structure is this, because it is quite confusing. If you will look like this, it will not easily come in your mind. So for that purpose, you keep trying joining the points first. So try to join the points, and you don't worry about the touches, whether you are getting the exact high point or the closing point. That's not our that's not the case here in the structure. Just look for a similar kind of structure, because if we join the series, join these points, we are getting a structure similar to contracting triangle, and that only matters for us. I will draw it again for you. So we are getting the three touches here, and on the higher side as well we are getting the series of lower swing heights, and that only matters for us. And after that we have got the three touches on the higher side. This is the one, this is the two, and the third one, which fulfills our guideline. On the lower side as well we have got the wave one touch, second touch, and third touch. 3 point on the lower side, 3 point on the higher side, that only matters. Then another guideline, we have got the wave 1 as the highest one. When you will join the first touch with the first touch on the lower side, you will get the wave 1. Then when you will join the end point of the wave 1 with the beginning of the wave 2, end point of the wave 2, second touch on the upper side, you will get the wave 2. After that, similarly, you can join the points then third one, and it is just the zigzag part structure, and wave 5. I will name it. This is the wave A, longest in the series. Wave 2, shorter than the this is wave 2, wave 3, and wave 4. And finally wave 5, as it will be little clumsy, so I'm not naming it. This is the wave 3, and this is the wave 4, and last one is the wave 5. Wave 3, wave 4, and wave 5. Finally you have got the breakout. If you can do a little twist here. What you can do, you as soon as you get two touches on the trend line, because when we are here we don't know what is going to happen next. Hide the structure. So when you are here, you got the two touches here, and the series of higher swing low, this swing low is higher than the previous swing low, what you can do, as soon as you get a third one on the uh, or when you will join the 2 points in the series, you will get the idea of the third trend line, or you can even get the you can even use this point as well to get the idea of the next area of touch. So when you will join these points, these even if you get these 2 points and you join them, you will get the idea of the third point. And as soon as you get the price in that range, you can take a risk here with the stop loss below previous swing low. Technically, we can make entry by using that principle as well. So when you get this point, you can enter into trade by using the stop loss around these levels. Why I am making some twist, because just to reduce the stop loss. This you can use as soon as you get the third point touch. This will be your entry point for the long position. Generally, the Elliott wave principle says you have to enter into trade as soon as you see a breakout. So, if you will try to open a position at this point of time, then stop loss will be very wide. And to avoid that, you can use this point as well, and stop loss will be exactly below this range, and stop loss will be here. This will be your entry point. So I will remove this marking, and stop loss will be here. You can use your own logic, own system to adjust with this kind of pattern as well. You can even use the ATR to know the idea, to get the idea of the range of that instrument, and accordingly you can adjust the stop loss. Now this is the contracting triangle, and expanding triangle will be exactly opposite to this. Now our job is to find the ascending triangle, and in that triangle we should get a series of lower swing lows and higher swing highs, exactly opposite to the contracting triangle. So when you are just looking at this chart, you will not it will not come in mind what kind of pattern is this. For that, because when you are looking, the instrument is in uptrend, because we have got the series of the instrument is in uptrend. Easily you can see that, because you have got the series of the higher swing low. If you will notice that this swing low is higher than the previous series, this is the exceptional case, because Sometimes they tend to do this, means that's how the actual trading is. The any instrument will not follow your written rules. They will move in their own fashion, own manner. So closing price is higher than this, and simply it will come in your mind the instrument is in uptrend when you will watch this chart, because price is moving to the higher levels, and every time it is making a series of higher swing highs. This swing high is higher than this, and this swing high is higher than this, and swing high is a point, highest point in that series. So in this series this is the highest point, and in this series this is the highest point. So if you will compare that, the this instrument is in uptrend, and after that our job is to look for ascending triangle pattern, whether we get that, because that will give us a entry point to open a long position. So we will try to join the structure. The beginning is here. So when you will first try to join the lines, it will look like this. Don't bother about the touches, whether trend price is moving out below trend line, doesn't matter. We just need a similar pattern, not the exact pattern. So this will, as soon as you join a 2 points, you will get the idea of the third points. So the you know that this is in the uptrend, and it is roughly, it is equal to the Elliot wave principle. One, then two, or three, then four, and the fifth one. So this triangle pattern can occur in fifth wave at say. So this will be a fifth wave. So you should not get confused. That's why I am not mixing that structure here. When you get the two touches and the series of the lower swing lows, you can think about this pattern as soon as you find an instrument in the uptrend. And on the upper side as well, we are getting the series of the higher swing highs. So 1, 2, 3. We have got the 3 points on the higher side, 3 points on the lower side. Or simply you can wait for the third point as well. You can use as you like. You can adjust this line as per your wishes. Everybody has got own style. Trading means don't exactly try to follow the other person's or the bookish pattern like structure. You will never get that. Just you will need to correlate your own ideas with the pattern. So you have got the similar structure here, and when you will name it, you will get, it will fulfill our criteria. Wave 1. Now we need 5 waves. So wave 1, wave 2, wave 3, wave 4, highest point you can join here or here, doesn't matter, and the last one is the wave 5, and our principle says wave 5 should be the longest one and wave 1 should be the lowest one. shortest in the series. So we have got both the conditions fulfilled here. 1, 2, 3, 4 and 5. And the twist is you try to enter into the market here as well, enter into the instrument as well, because if it has to reverse to the higher point, it has to reverse from this point only. Otherwise, if sometimes what happens, it keeps going down and down and down, that can also happen. So that's why original principle guideline says entry point will be here as soon as closes above this range. So you will need to find the entry point here. This is the breakout kind of breakout trading system, but you can make a twist here and you can try to enter into the market here as well, because you have got the consolidation in this range. Instrument is trying to remain in that period for some in that range for some period of time. So you can try to open the position here as well as soon as you see a breakout here also. Or if you want to try, if you try to want to catch a bottom, you can try to catch from these levels also, but sometimes it can be risky. You may get stopped out earlier and then instrument can move to the your desired direction. So to avoid that, you can wait for a little move to the upper side, and it has reversed from this side to the higher side, and it has got the breakout in the series. It has closed above the latest swing high in the series, and you can try to open a position here, and stop loss will be around this range, and you can keep target 2 to 3 times in that ratio how much you are risking per trade. So every time whenever you enter into trade, your profit ratio should be larger than your stop loss, then only your trading will be in profit. So we have got the structure. Now friends, practice this. Try to find out this kind of chart on your own. When you will practice more, it will easily come in your mind, and whenever you see this kind of example in the live trading, then you can get benefit out of this pattern. Because sometimes what happens, generally if you are look for a structure, nothing will come in your mind, and you will be just wondering about watching in that instrument how it is moving. Because see, if you will notice, it was in the uptrend and then suddenly it reverses to the lower side, but it is also one kind of corrective structure if you are already familiar with this kind of pattern, and it works well in the trending market. Sideways market, it will not work that in that good way. So practice this kind of pattern in the chart. Try to find out this kind of pattern on the charts, and share your experience. Do write in the comment box. If you have got any questions, I will be happy to answer that. So I wish all my friends happy Easter and happy weekend. So that's it for the day, friends.